Welcome to LegalTech Briefs, where we explore the intersection of innovation, law, and technologies that are shaping the future. Today, I'm joined by Henry Ward, CEO and co-founder of Carta, the equity management platform trusted by over 50,000 companies across the globe. Carta helps private companies manage their cap tables, valuations, equity plans, investor relations, and it does it all with clarity and ease. Henry brings deep experience in tech, finance, entrepreneurship. His thought leadership in and around Carta, in and around ownership models, has really helped to shape the entire industry. For those that attended, you may remember his standout talk last year at last year's TLTF Summit, which was one of the event's most discussed sessions. Henry, it's a pleasure to have you on the show. Thank you so much for spending a few minutes with us.
For sure. Thanks for having me, Zach. We're really excited to be here.
And I know that I may have just read a little bit of a description that's a little bit outdated these days, because I know you're thinking a lot about funds and things, and how you almost act as like a CFO for funds. But maybe if you don't mind rewinding a little bit, talking about the founding story of eShares, and then almost taking that to the scope and the scale of Carta today, if you don't mind.
We started in January 2014. We launched our first product, which was not cap tables. It was electronic stock certificates. So our competition was FedEx. So back then you had to physically print and mail a paper stock certificate to your investor, and they would file it in a filing cabinet and hold it hopefully for 10 years and then redeem it at IPO. And that's how that worked. And we're like, hey, don't spend $100 for paralegal to print it and $50 to FedEx to send it and all that kind of, and read receipt and all that stuff. Instead, we'll just email it. We were PayPal for equity, and people liked it. It had, I would say, weak product market fit, but as we started getting that out, customers came to us and they're like, Henry, can you just put all the electronic stock certificates you emailed into a page and just show me all of those things? And I'm like, why would you want to do that? And oh, that's called a cap table. And I was like, oh, sounds pretty good. So we just started doing that. And then they were like, can you issue the option grants and put that in a page? And we're like, sure. And then that was the cap table. And then they said, hey, now that you got the cap table, can you export the cap table and send it to 409A valuations people, that are somewhere else? Because they're going to run a math model on your cap table. And then they'll send you back a report called your 409A report. And then can you just save that for us and then put the numbers into the cap table that they calculate? And they were paying us like $50 a month for this cap table software. And they were paying the valuation people $10,000 a report. And I was like, this is not cool. So I said, well, how about we'll learn the math and we'll do the 409A for you, and we'll do it for $500 instead of 5,000 or 10,000. And they said, great. And then that became our 409A business. And then somebody came to us and said, hey, we have to report stock option expense, which is just, can you export the options and then run it through a math problem, and then we'll put the expense back in the cap table? And I was like, we'll just do that. And then, and you just keep doing that. That's entrepreneurship. You just keep building what people need.
You tell that in a playful manner, but I mean, how much was it like customers pulling versus some sort of vision you had, or was it really like you had no idea where this was going to take you? You just knew that the $50 FedEx didn't make sense.
We had two, I think, vision points that we firmly believed at the time. And that was, one is equity should be dematerialized the way currency was in the 1970s, when Richard Nixon, ended the gold reserve days where, we pinned cash to gold, and said currency can fluctuate. The dollar can fluctuate, and we can create more currency because it's now in the cloud. Whenever we need it, we can create it. And that dematerialization of money out of cash and into bits created trade deficits and credit and loans, and just like every modern infrastructure is built on that idea that you dematerialize cash. And so our view was the world need to, and you dematerialize equity. The stock market was born in the 30s or really in the 70s, when they dematerialized equity and said, let's put it in the cloud, let's put it on mainframes. And now you could create stock markets and you can brokerage accounts, and you can move things, and you could do all kinds of crazy things. You could do loans against stock. Like everything was invented because now you could dematerialize these paper stocks, public paper stock certificates. And so we had this very strong North Star vision that private capital should be dematerialized. It's all in paperwork. It's all in lawyers' desks. It's all on spreadsheets. We should dematerialize all of that and push it into the cloud. And that was North Star number one. And the North Star number two is that if you did that, you could rebuild capital market infrastructure from the ground up. You didn't have to wait till an IPO or a bond issuance as a public company that this stuff is dematerialized. You could be dematerialized at incorporation, and that would pave way for a new market infrastructure. And so we believe those two things. Everything else customers told us. Right? We're like, hey, electronic stock certificates, so like put in a table, 409A, expense accounting, law firm, paralegal user, compliance, like all that stuff was customer driven.
On that last note, that paralegal user at a law firm, for us, that's as the LegalTech Fund, we think a lot about software, also obviously that sells into law firms, but also that gets distributed through law firms. And I almost think like Carta is almost like poster child. Like you guys created a role for the law firm. Directionally, you could argue you took some work from law firms, but the flip side is it seems like law firms, or everyone we've interacted, is much more keen to partner with you than to, think about that side. But I'm curious, like how that came about, and how important do you think that was to your growth?
It was arguably the hardest part of building Carta was to get the law firms on side, and now is probably the most defensible part of Carta. We have the law firms on side, and the problem back then was, maybe we were chipping away at some of the revenue, but the reality is it wasn't high calorie revenue. It was administrative paralegal. I remember a partner said to me, he said, Henry, nobody says to me, none of my clients say to me, great job not messing up my cap table. Like you don't get bonus points for getting the cap table right. You can only mess it up. It's only a liability. I would love not to do it. So directionally, I think we were right, but people can believe that they want something, but actually getting them to there is actually really hard, because you had to change the way they operated. They had their own internal systems. They had their training. The paralegals had a way of doing it. You had to really change their behavior, which is not easy to do in law firms. And so they really rejected it. And we tried to sell to law firms. That was the first thing we tried to do. And I'm so glad it didn't work, because it was the wrong decision to sell to them. And then when they wouldn't buy it, we went to the startups, and the startups really liked it, because we're like, well, real-time cap table, you can log in anytime, you own your data. So if you move from one law firm to another, you don't have to get the law firm to send your cap table data to the other law. Like you had control of your own cap table, and they loved it. But then the law firms would say, no, don't use e-shares at the time when we were early stage. And so we had this battle with the law firms, and I would call these partners and I would say, hey, Acme startup says they want to use Carta. I heard you told them no. And they go, yeah, Henry, because we don't want to learn a new system. And I said, look, then I'm going to tell them you're overbilling them. And they're like, what? And I was like, well, if you can't tell that, if you can tell them not to use my software, I can tell them not to use your service. Fair is fair. Yeah. And that they should go to another law firm that actually doesn't overbill their customers. And it created this game theory problem where I basically told all the law firms, I said, I'm going direct to the founder. If you say we like e-shares, we will say we like that lawyer and that law firm, and we'll work together. And if you say don't use e-shares, I will say that law firm overbills, and you should go to another law firm. And I mean, that pissed everybody off, but eventually it worked and it converged. And then now everybody's like, we use Carta. And that was the tipping point for us.
I would say, was that one of the most frustrating parts as your career as an entrepreneur? Just like, you got something good, you got customers that want to use it, and then you got this blockage coming out of nowhere.
100%. Like they say, the hardest thing is the rejection of investors. For me, the hardest thing was the rejection of the law firms, because they controlled the ecosystem at the time. And if they didn't, it was an oligopoly, it still is. And if they said, don't use this system, and the thing is it's my livelihood, it's my payroll, it's what pays for my rent and my kids' food. And they're saying, just don't use it because we don't want to change our ways. And it's like, it was deeply personal. It was a battle. And I would say that's the hardest business thing I've ever done was to get law firms on side.
Wow. No, and now I know they all love you. Like they don't think they don't want to do anything differently. They're very happy with that role and how you help them and their clients.
Totally. And the thing is I would argue that one of the reasons why it's been hard to build a second Carta for like a competitor is not because, cap tables is rocket science or anything like that. It's because to get the law firms on board is really hard. It's very difficult, and you have to have a special kind of entrepreneur that's going to grind hard enough to make that happen.
When you think about the North Star that you described, or the two North Stars that you described earlier, you think you're like 10% of the way there, 80% of the way there?
Yeah. So I would say, we're more than half of the way through dematerializing venture. Most cap tables are in the cloud. Very few of them issue paper stock certificates anymore or track in spreadsheets. Fund accounting, most venture funds now are on Carta. At least, emerging managers in the next generation of funds, they're all on Carta now. They're all managing their funds in the cloud, not on spreadsheets and PDFs and mail merge. They're running real businesses on software. Carta is one of the reasons venture as an asset class was able to scale so well in the last decade, because if you were doing this in paperwork and spreadsheets, you just couldn't scale these businesses the way that we have as an industry. And so now we're looking at private equity, and there we're 2% of the way in. Dematerializing private equity, it's a bigger market, bigger industry, more complex. It's like venture, but 10x the depth of venture. So we're still in early days on private equity, and then we're actually also launching a private credit product or platform to manage private credit, and that's 0% penetrated now.
So very, we talked to companies much earlier than you guys, but we talked to all these companies, and they have a product that says, "Hey, we're going to start with venture docs, then we're going to go to private equity, then we're going to go to whatever it may be." Very few companies, even at an early stage, are able to make those jumps. And then it seems like if they get acquired to somebody bigger, these things go to die. But it seems like you guys continue to like push forward, in almost a way that a startup would. I'm curious, what types of things are you instilling in the culture, or how are you thinking about these things, especially at scale with tons of employees and things along those lines?
Yeah, I think we have maybe two, maybe three advantages that are idiosyncratic to us. So one is the conventional wisdom for a founder is, they fall in love with the problem, and entrepreneurship is a vehicle with which to solve that problem. I'm the opposite. I fell in love with being a founder, and I don't really care what problem I went to work on to be a founder. Like I'd work on anything. No loyalty to a problem, which is both, the con of that is that a lot of people like give up because they don't care about the problem, and they don't have the tenacity to kind of see a problem through because they don't care enough about the problem. The other side of it is because I'm not married to the problem, I don't get tunnel vision, and I'll work on anything that moves the business forward. And so I think that, a company takes the personality of its founder. And so we're just an innovative company. We're like, we'll work on anything. Nothing's too low brow for us. Nothing's too, stupid for us. We'll do anything that we think moves the mission forward. We'll do. And then I think the second is because the biggest criticism you can imagine, Zach, is the early days of us is how big's the market for cap tables? Not even cap tables, electronic stock certificates, come on. And so we just developed a paranoia as a company. We still are this way. We're 2,000 employees, and we still wake up every day paranoid that any market we're in, we're going to run out of oxygen. And so we're constantly innovating. We have probably 12 products, 13 products now that we sell as a 2,000 person company. And I've got 7 in the hopper that are coming out. Yeah. Probably 2 of the 7 will work if we're lucky, but we're just constantly building stuff and finding like, who else can we sell a product to and solve problems for? And it's just ingrained in the culture.
So, is that the formula you'd recommend? Because like a lot of people in and around the legal stuff that we spend a lot of our time in, to the outsiders, there could be TAM issues with a lot of these businesses. And I'm curious, is that the approach well, how would you suggest an entrepreneur approaching this space think about those types of things? Because, it's easy for investors to say, oh, no, this is too small of a space, et cetera.
Yeah. So I have a very strong perspective on this that probably wrong, maybe right. A lot of people will disagree with me on this, but I would say Carta, what we do better than most in the world is we turn services industries into software industries. Like that's what we do for a living. And whether it's cap tables, which is law, legal services, 498 valuation services, fund accounting, which is accounting services, whatever it is. And the thing that we've realized, like we've learned, is this: if you are going to build software if you're trying to disrupt an industry, a services industry, and the way you do it is by selling software to the service providers, you will never build a big company. And the example I use is like, we weren't the first cap table company. We were like third. There was a company called CapMax, or product called CapMax, that all the law firms used in 2014 when we launched. But they charged the law firm. And all we did was say, the law firm your money's no good with us. We're going to charge the startup. It's free for you. Same problem, same product. It was actually a lesser product. All we did was charge the startup. And, I think one of the big law firms was using CapMax, and they were paying $100,000 a year for the license to, manage their book. And we now, manage most of the book of this law firm. That book is worth $30 million a year to us. Same product, same customer, everything.
So we're seeing a lot of this now in legal, especially as regulations are changing across the country for who can participate in the profits of a law firm. We think you're going to see a lot more tech entrants. It's almost like a once in a career TAM expansion opportunity. Like that's another way to look at it. Like the next person that competes against you, like you guys get to, where the TAM may have been very small to law firms, now all of a sudden it's massive.
That's right. And the thing about services, when you disrupt services are inflationary. The cost of services are inflated. They go up. The cost of software is deflationary. It goes down. And so what happens is you look at every service industry in the world, and then the software players that are in it, whether it's lawyers, which starts $2,000 an hour, but pay, $500 for the software that they use to charge $2,000, or in my industry of fund accounting, if you look at the book, if somebody pays $100,000 to a fund accountant, $95,000 of that go to the people, and $5,000 goes to the software that the fund accountant uses. And so if you really want to disrupt these things, you have to actually go to the end customer. And if you have to do something that requires legal support, if you can disintermediate the law firm, you can go direct, to your point about like, can you actually create a legal service that's disintermediating the current legal system or industry? That's one form. But even if you're doing something like us, which is we'll go direct to the customer, but we still need legal service. We still go direct to the customer. We just bring in the legal service as a partner framework. And that's actually what we're doing in fund accounting and other service industries. But you have to own the customer relationship. And that's what most software companies get wrong, because their product founders are like, I don't want to deal with customers. If I sell to a law firm, I sell to a fund accounting firm, I get to sell once and they distribute it to everybody. That is true, but they also get to keep all the money. And that's the mistake they all make.
Yeah. And we've kind of seen this evolution where, it almost went from like a SaaS fee where you're capping out on kind of, obviously if once the law firm pays the SaaS fee, any value that's accrued above that, they get to keep. Then we saw this model of saying a couple of years ago, hey, let's charge per transaction every time you hit play. We'll charge you something bigger. But now we're seeing this next level that's, very, very much in line that I never thought of you guys as, but you guys are really a pioneer in this construct, for some of this stuff. Maybe just like one or two questions about the founder journey. You mentioned you were in love with this construct of being a founder. You enjoy it. Has that changed as the company has scaled? I mean, it's obviously a very different job today than it was, 10 years ago.
It's only more true. My first company failed. This is my second one. It's working out a lot better. And I just love what I do. I mean, I love, you only eat what you kill. There's no A for effort. The market is, completely objective. You can't blame anybody else but yourself. Like just living on the edge and building, meeting customers, understanding their problems and solving their problems. That's just the job. You just get to do it at bigger scale, and it only gets more fun. And even, when it's not fun, like not every day is fun. you know, and you deal with the hard stuff and the unpleasant and the nasty stuff. And just like it gets hard, the fun stuff gets more fun. The not fun stuff gets even more not fun. You know, these things are tough. You know, I always say, you know, how lucky am I that I get to have these kinds of problems? You know, it's just like not many people, even the nasty stuff, not many people get to work on nasty problems like I do.
And for the founders that are listening out there, any advice, anything, how specifically thinking about these types of verticals, any learnings you wish you had earlier? I mean, obviously a lot, but and any simple advice you give, or what do you say to those folks?
You know, I think legal tech in particular, my view is any company that's selling to law firms to increase efficiency is probably, you know, hitting their head against the wall. The business models just don't work, right? Like the business model is an hourly model. It's a consumption model for them. So you're actually antithetical. If you're trying to like make them more efficient, you're actually literally beating up, they're destroying their business model. And so that kind of stuff doesn't work. What you could do is sell to the end client, you know, the customer of the law firm, tools that allow their lawyers to be more efficient, or their law firm. And then the startup chooses, or the client chooses it, but not the law firm. And so I think one of the things, you know, I was very lucky that I didn't know that at the time, but the law firms were smart enough to kick me out and say, we're not going to buy your software. Thank God. If they had bought my software, I would have solved for the local optimization, which is like I built a $5 million business selling to law firms.
It'd be 5, not 500.
That's exactly right. That's exactly. So thank God they were smart enough to know they shouldn't buy my software. And like one of the things when I talk to legal tech founders all the time, they immediately go, "Oh man, it's hard selling one customer at a time. Let me just go sell to the big law firm, and that's easier." And I'm like, "Don't do it. That's a local optimization, not a global optimization."
Henry, I can't thank you enough for spending a few minutes with us and for all that you do to the community. I know you mentor a ton of entrepreneurs and startups. Looking forward to seeing you in November at the TLTF Summit again. But thanks again for making a few minutes today.
Super. Always. Thanks, Zach.